Hello everybody, in this video we learned how to catch a reversal trade. If you are new to the channel, please do subscribe. We have prepared a presentation for the same and we'll be explaining each and every step. Coming to the first slide. Firstly, we have to understand what is the trend. So first and foremost, we need to understand how trends work. There are basically three types of trends we witness in the market: uptrend, downtrend, and sideways trend. Coming to uptrend first. An uptrend is denoted when stock prices form higher highs and higher lows. It looks something like this. Next is downtrend. A downtrend is denoted when stock prices form lower lows and lower highs. It looks like this. Coming to the third kind of trend, that is sideways trend. Sideways trend is denoted by prices moving in a stiff range and are unable to find a direction. It looks like this. Basically, the prices move in a range-bound direction and are unable to break its highs and its lows. Next, we understand what is a market cycle and how it works. A fundamental understanding of the same is important before you enter into the stock market. This is how prices work. The market cycle starts with accumulation phase. So this stage is denoted by a sideways move. A base formation happens in this stage. Prices don't really move in a particular direction, they remain in a straight range. Then comes uptrend. In this stage, prices start going up, forming higher highs and higher lows. After that, what we see is a consolidation phase. Basically, this stage comes just before the distribution phase. In this stage, prices stop forming higher highs and higher lows and halt their up move. Next in line comes downtrend. It is also called the distribution stage, as prices start going down and sellers take over the market. It is denoted by prices forming lower lows and lower highs. And once again, then we come to the accumulation stage. This is how the market cycle works. So now that we have learned how does trend work, what is a market cycle, we can further move to identifying a reversal bet. So what do you have to do here? You have to pick a stock that is in the accumulation phase. The stock must have halted its downtrend and stopped forming lower lows. Find out the area where the stock is facing a stiff resistance and mark that area as a resistance. In a similar fashion, just find the area where the stock is taking a good support and not breaking that level. That area will act as a good support. Once a base has been formed and the stock breaks the resistance, that's when you take the entry. One can place the stop loss just below the support area or below the resistance come support area. Now we will understand this with the help of an example. Coming to an example now. If you see on the charts that the first step was the uptrend. If you see that an uptrend came, after which we saw a consolidation phase, which is also known as the beginning of the distribution phase. After which we saw a good downtrend, followed by the accumulation phase, and then once again the uptrend. Then once again what we saw was the consolidation phase and the downtrend. So this is how the prices move. This is the life cycle of a stock. You can check the same in other stocks as well. What we have to do here is, as soon as the range was broken, if we see that the range was broken, after which we saw a good uptrend, what we can do. Now that we have identified the accumulation phase, we will take an entry on a range breakout. As soon as the range breakout is done, in this example with a bullish green candle, we will take an entry at the close of that candle. We can place a stop loss just below that candle, or we can also keep a stop loss below the previous swing low, or we can also keep a stop loss at our support area. On the close of this candle, we'll take an entry. In this example, we saw that the breakout was done with a bullish green candle, after which a good uptrend came in the stock. So this is how we identify a stock and get into a trade in it. Please note that for the stop loss, when we mention the support area is basically the resistance that was broken out, which would act as a support now. Here is another example for you. In a similar fashion, we see how the stock first came in an uptrend, then the consolidation phase, after which we saw a downtrend, and then the range bound zone. That is also known as the accumulation phase. We have also marked the breakout zone on the same chart. As soon as the breakout came, we saw a good uptrend after that. So this is how you use the market cycle. So this is basically how you identify a reversal bet. You just need a basic understanding of the market cycle and the trends. The same concept can be applied to multiple time frames across different asset classes. Lastly, here's a live example that you can keep a track of to test what you have learned. This is the chart of KPIT Technologies, and if we see that KPIT Technologies is in the accumulation phase. Please note that the screenshot was taken on the 9th of March, so the prices may vary. With this, we wind up our presentation. I hope you liked it. If you have any queries, please feel free to ask in the comment section. Thank you so much for watching.